Hello traders, Gary Wagner here just before 11 o'clock in Honolulu, 4 o'clock in New York on Wednesday, the 5th day of March 2014, and this is the daily report for gold and silver. We do have moderately higher pricing across the board in the precious metals market. Actually, platinum's leading the way, up about $20 on the day to gold. As you can see, current print 1338, 1339, puts it up roughly $4 or $5 on the day, low 32, high 43. Silver also showing higher pricing today, although it's only up about 5 cents on the day, 21.19 current print, 21.07 on the low, 21.40 on the high. More about silver towards the end of the show. Traders, first chart that I want to look at today is a 240-minute chart, a cash market of gold. We use this chart primarily for our very, very short-term support and resistance level, and we base that on trend analysis along with Fibonacci retracement. We talked about the fact that after we had this market breakout, we, of course, targeted that 1329. That was the area, that was the top that I initially was looking for. We can see the market came, tested that top, made a pretty decent retracement. I believe that this retracement itself was a 23% retracement, moves on up. Again, we get a smaller retracement in terms of the market move itself. This one, I believe, was almost 50%. Again, market moves up and then comes down and then finds support now rather than resistance at 1329. And that to me is what is really important, because when we consider the fact that this market has had an increased amount of volatility, and what I mean by that, I should say, rather than volatility, has had an increased amount of directional moves, would be a more adequate way to put it. And what I mean by that is, when we went nearly parabolic, the characteristic of the market was pretty much a solid rise up. But now what we're getting are, again, these series of spikes and then very quick retracements. They're fairly shallow, and when I say shallow, they're deep in terms of the small picture. In other words, if the market simply moves from, let me change the color of my arrow here, but if the market simply, if we do our fib retracement from these small moves, of course, that's a 50% retracement. But when we consider the entire move that we're looking at, it is a very, very shallow retracement. So with that in mind, we're going to maintain our current stop at sitting just under 1327. And as I said, the rationale behind it is we absolutely need to protect ourselves if the market breaks and makes new lows. But right now, the characteristic of the market is a bullish characteristic. And what I mean by that is we get a series of higher highs and then a series of higher lows. As long as we're doing that, we're really pretty much moving up the scale. I'm satisfied with the performance. We're in just a few dollars before this at 33, so nothing to write home about. But we also know that we have some real resistance at this one particular peak. So traders, what we're looking at in terms of our upside current target and current levels of resistance, really what we can see is this top that we had here. This was just above 1360, I believe 1365. We can identify this top as our next real level of resistance. We've come close to, but we haven't actually even threatened that. We've backed off just prior to that, and we'll have to see really how that unfolds over the next few days. You know, traders, when I look at our what I call our long count, and that's our long Elliott wave count, where we're looking at 1, 2, 3, 4, and 5, our ABC, and then into our bear count. What I'm attempting to determine at this point, we absolutely had our truncated fifth wave, this bear market truncation. However, there is another possibility in terms of our current count, and I just kind of want to put it out there. It's something that I'm exploring, and that is when we take a look really at this big picture. And what I mean by the big picture is we want to talk about the major count itself behind it. And these would be our major waves. Our major wave would be 1, 2, 3, 4, 5. 1, 2, 3, 4, and 5. This all makes up a major count. that would fall just underneath that. So 1, 2, 3, 4, 5 would be a major third. And then our ABC, that would be a major fourth. And as we move down into this marketplace itself, there's another way that we can look at it. And that way I find kind of interesting, because if we can make a case that all of this right here is A, and this is our B wave here, and then this double bottom here, this is our C, in terms of our big or major count, if that's the case, and if that model bears some kind of fruit, and you'll understand why I'm bringing it to your attention now, then what we would look at is the conclusion of C here. And because of the fact when we look to see that that was a 61% retracement of this major move, so if we had a major first, let's say that this is 1 here, this ABC, that would be 2 here, means that we're headed back into an impulse phase. And an impulse phase, the difference is we're going to get wave 1, wave 2, wave 3, wave 4, and wave 5. Now, obviously not within that time parameter. I'm looking at this as a 2-year move. But here's why it's so important. If, in fact, we have left that bear count, and if there is a good, effective model that can make a case for this being a major 1, and then our ABC, this being a major 2, then this major third would take us to really new price highs. Now, according to my count right now, I'm looking at this top right here as a 3, and this would be a 4. That would put us into a major fifth, and that would be tremendous, because a major fifth would actually, by theory, take us to new highs over the next 2 years. So it's absolutely, in terms of the big picture, something that we do want to consider. As it unfolds, we'll have more evidence that will either confirm or deny this particular model. But really, it's exciting news, because I've been looking at this ever since we broke above this long-standing resistance line, because what that means is that we have a different ball game. Now, as far as silver goes, looking at a longer-term chart, this, of course, is a weekly chart, standard candlestick format. And a couple of things become quite apparent. When we take a look at this most recent top, you can see that it doesn't really fall at any real level. And in the same way, this current top that we have in gold is just under the 1365. It corresponds to this, and this, of course, corresponds to the time in which gold was trading at 1435. But we've got this doji-like candle coming in off of the week. It's fairly unchanged, and that actually is a positive sign after the type of week we had last week, in which we saw the market really give up a substantial amount of this rally. We will maintain our current position in silver as well as gold. This has been Gary Wagner, wishing you, as always, good trading. Talk to you tomorrow on Thursday for another daily update and review. Bye-bye.